yeah,
All
I
right.
don't want to read too much.
Yeah. All right. And I just have a couple of little.
Oh, and do you have the time?
Oh yeah, it's 7:10, 8:50. I don't know if you want to write it down.
Yeah, let's get that real quick.
7:10, 8:58, 8:40, 9:19, and 5:10. Okay.
Blue. Okay.
Yeah. What's that? All right, and let's start right now. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, and my co-host today is Phan of Pacific Private Money because Mark is off today. Our phone number is 888-912-1190. You're going to use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And those certificates are not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is going to be random trivia. Nam, you got a lot of good stuff to go over, so go ahead, take it away.
Yeah, good afternoon, Edward. Good afternoon to our listeners. Today I wanted to talk about a couple of things. A few deals of the week, some questions or some commentary about the real estate market, and some of the things we'll touch on about our fund. And maybe I'll start with a newsletter that we sent out to our fund investors yesterday, which we talked about is there a real estate market downturn? We're getting those kinds of questions from investors all the time. We had a fund event earlier in the week, and that question always comes up.
Yeah.
People want to know if their investment's going to be sound over the coming years.
Yeah, are we in a bubble? I mean, the market declined severely, started to come out of it in 2012, 13.
Yeah.
It's been a good 4-year run. Give us your future prediction.
Yeah, well, it's funny because what I'm about to say is something that is echoed from conventions and a lot of events that Mark and a lot of our staff attends. And the consensus is that over the next couple of years, the real estate market will be stable.
Okay.
But that maybe in 18 to 24 months, there could be a correction. Worst case scenario is 20% or 10 to 20%.
Okay, so not a severe declining crash type thing is what they're predicting.
Right.
And that's probably 24 months out also.
Yeah,
Okay.
exactly. And obviously, corrections are, real estate's local. So, that's, it's a very general statement.
Sure.
But they've been, they've been saying it for the last couple of years. Every year, it's going to be 2 years out. But we've had a really strong run of solid real estate growth.
And interest rates have blipped up a bit, but not severe. And does the Fed look like they're going to keep them relatively stable?
Things look relatively stable.
Okay.
And then locally in the Bay Area, it's stable, strong market. There's just low inventory still. So, which kind of takes us to the other part where is the other question that's asked is there a housing bubble? Are we in a housing bubble right now? And in the Bay Area, generally the answer is no. There's still limited supply, very limited supply. It's building for development is overly onerous for the developer.
Yeah.
So there's always a housing constraint. The economy is strong, low interest rates.
And as long as you still have people entering the Bay Area rather than a mass exodus, which doesn't really seem like there is a mass exodus.
Not necessarily, although prices have had been climbing fairly steadily.
And they push some people out of the market, right?
Right.
You do hear, I'm moving to Portland or I'm just moving out of California because it's too expensive.
Yeah, and I would say for a while there, it seemed like there was more outflow than inflow, but prices have stabilized too. We're not seeing significant appreciation, although in Oakland, East Bay, there's still very, very strong real estate.
Yeah, well, the prices were so low before as compared to everything else. San Francisco gets too expensive, and then people move out. Well, and I think, we've talked about this before, a good 3 to 5% growth is good. It's sustainable.
Mm-hmm.
It doesn't, go crazy. It's like, the stock market should be the same way.
Yes.
It's when it goes up way too high, and people then you start selling, and then that kind of does a snowball effect. So
Right.
That's slow and steady.
Yeah, and the stock market's been climbing quite a bit. So, just the takeaway was in the newsletter we sent out is that really real estate for the next 18, 24 months looks good. We don't see a major correction. Real estate, whether or not we're in a bubble, we don't, we really don't see that happening either.
Okay. So the advice then for potential investors
is if you're investing in a fund like ours, we see steady growth. We see the returns being fairly stable, 7.5% to 8%, and we put a lot of loans in the fund that are short term in nature. So there's high revolution of capital. The loans turn over, so as time, typically a lot of these loans are 11 months. So if there is a correction, then these loans are going to pay off before.
The interesting thing is, you mentioned the fund is currently paying between 7.5% to 8%. And I'm thinking, if I'm out trying to buy real estate, I can't find a cap rate of 7 to 8% very easily. I'm looking at 4% or 5%, and then where's your growth? So I'd much rather invest in something that's going to give me steady cash flow that's diversified and paying a fairly high return, and I don't have to worry about fixing the toilets or getting calls from tenants and that sort of thing.
Right. Yep. We have a lot of investors who have gone that route previously, and then they're tired of it.
Yeah.
Put their funds, they invest in our fund, and it pays all the time.
So. Yeah, because you guys pay monthly. Okay, we're going to cut to our first commercial break. Before we do, I want to make a mention here for the Gym Guys, which is a mobile personal training company. So rather than you going to the gym comes to you. They have a van, and they equip it with all kinds of equipment, and so it's kind of cool. You just give them a call, and they come to your house, do some training with you. You've got the weights, got armbands, whatever else equipment they have. And that's pretty cool.
That's a great idea.
Isn't that a neat idea? I like that. A lot of people are kind of embarrassed and don't want to go to a gym, so you just have them come to you. So you check them out at www.gymguys, and that's with a Z.com, /locations/Marin-County-California, or CA. Right now they're just in Marin. They're going to expand to Petaluma. Their number is 415-448-8100. All right, here's our first trivia question. In the movie Sideways with Paul Giamatti, what red wine does he refuse to drink? That's our question. Call 888-912-1190. If you're the first caller with the correct answer, you win that 5-pack $10 certificate. Don't touch that dial. The best of investing. We'll be right back. Did you see the movie?
I did, and I think I know the answer.
Okay. I'll let you answer on here. Don't tell me.
Talk about our cash sales.
Oh, okay.
Just kind of dovetail on the market. Talk about borrow side of that.
I think you like doing this show.
You know what? I've sat through enough of them that, although I'll tell you, it still makes me a little nervous when I see the amount of content that I don't have.
Oh, so, but you know what? It's just, a guy sitting around a bar, having drinks.
Hold on, let me, I didn't get the,
This one will be 8:58.
Okay.
Ready? Yeah. Here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with our special guest co-host, Phan of Pacific Private Money. First trivia question was, in the movie Sideways with Paul Giamatti, what red wine does he refuse to drink?
Merlot.
Merlot, that is correct. And it's interesting. A lot of people, they hear the name Giamatti. Where do I have heard that before? Well, his dad, A. Bartlett Giamatti, was the guy who banned Pete Rose for life.
Oh, really?
Yeah, he was the baseball commissioner.
Ooh, that's
so
not
he had
good.
quite an upgrade there. Before we get back to it, I want to make a mention here also for the San Francisco Symphony. You can listen to Shostakovich and Tchaikovsky performing May 25th through May 27th. Tickets and information, 415-864-6000 or visit sfsymphony.org. You get music that grapples with life, death, and fate. All right? So check them out. Okay. So, Nam, go ahead and continue on.
Yeah. So just dovetail from the previous section about the real estate market. One other thing that we track are cash sales. Um, People making all cash offers, and it was an interesting statistic. So, in cash sales in the Bay Area had been around 25%. So 1 out of 4 real estate transactions have been cash sales, which is pretty crazy when you think about it.
Was that like all the Chinese money that was coming into San Francisco?
I think there was a lot of foreign money on the West Coast and major metro areas from Chinese investors, but also in the tech world, Silicon Valley that we live in and live with, there are a lot of people who are flush with cash, making all cash offers.
Those Facebook 30-year-olds.
Yeah, millennials being able to plop down quite a bit of coin, I guess, to make the purchase. But that number has dropped a little bit to about 22%.
Okay.
That's not a big drop, and historically, the cash sales have been around 5 or 6%.
Like in the past 20 years or so.
Yeah, in a more normal market. But what does that tell us? That tells us that in most markets in the Bay Area, still 1 out of 5 transactions, 1 out of 5 sales are all cash. So
that's still a lot.
Mm-hmm.
So what would a potential buyer of real estate who can't compete against that all cash buyer, what can that person do?
Some of them could fit in a scenario where and here's where some of our borrowers come from, their situation. They have a home to sell, and they want to move up or move down. Typically when you're writing an offer and you have a home to sell, you have a sale contingency. You can make a purchase on the home that you're making the offer on, contingent upon the sale of the home you're in, and being able to use those proceeds towards down payment or the loan payment for your purchase. That's not attractive to a lot of sellers who are comparing offers that they're getting in on their property.
Yeah, they don't want to wait.
Yeah, they don't want to wait, and at the end of the day, if they have, let's say, 5 offers and one of those is all cash, typically that cash in hand is something that really is favorable for that buyer who's made that offer. So,
especially if that seller also is looking to get the cash to do something with it.
Mm-hmm. And so we get borrowers who come to us who have that scenario where they have that home to sell. As private lenders, we're able to cross-collateralize, so we can take the equity that they have in the home that they own and combine with the down payment and calculation, we can make a loan to them for that purchase of property that they're looking to make an offer on.
So effectively, is for the seller, it looks like an all-cash offer is coming in because you guys are coming in with money. How fast can you guys fund?
We can fund in as little as 7 days.
Okay, so there aren't too many offers, even cash offers that are going to close in 7 days anyway. So, a foreign investor coming in with all cash is you can help the buyer of property compete with that.
Yeah. So essentially, they could make a no sale contingent offer.
What's the catch?
The catch, they're getting a loan with us. It's a little bit higher in cost, but they get
there
the loan.
You go. Okay, it's a little higher cost, but they don't have to get locked in for 30 years.
No, typically what's happening is we're putting them or able to provide them with what's called a bridge loan. So a bridge loan is less than a year. Typically it's 11 months, but we often get paid back by that borrower within 6 months, 4 to 6 months.
Yeah, because they go get a regular bank loan.
Right, when they sell their home.
Yeah.
So essentially they're selling the home that we're providing the loan so that they can sell their home, keep it on the market, and then use the loan from us to purchase that property. So now they actually have 2 homes. But once that's their first home sells, they take the proceeds of the sale to pay us off completely or to refinance. And typically, they do that within 4 to 6 months of getting our loan. So.
Okay, so you're like an alternative financing because there's no bank that can work that fast. There's also no banks that I know of that'll cross-collateralize like
right. Typically, a conventional bank's going to look and say, you can't afford 2 mortgages.
Yeah.
But for us, it's all about the story. We know that they're going to exit our loan, and they have an incentive to exit our loan.
And what's a typical cost?
Cost, there's fees and points.
Okay.
So anywhere from 2 to 3 points, $2,500 in doc processing fees. Rates are generally in the high 9s
Okay.
to 10s.
But if they're not going to keep the loan that long, that interest rate isn't really the big factor, especially if they're going to get a conventional loan and live in the house for 5, 10, 20 years.
Yeah, and ultimately, if you break it down into numbers and they compare the cost of that rate for 4 to 6 months, let's say, versus the opportunity cost of not getting the home that they really want, oftentimes it's a no-brainer. But they really just need to see it on paper.
Yeah, I mean, how do you put a price on getting the home that you want?
Right. If it's the right school district for your kids, or
I mean, a good example of that is the house we live in now. We really, really like, and we paid more than we really wanted to by a fairly significant number. This was back in 06. The market, it was still kind of the top of the market back then. But you know what? I look at it and I go, well, I got kind of the house of my dreams, and I don't really think that much about how much extra I spent for it. Because I know I'd be kicking myself if I didn't get that house.
And you're planning on staying in that house for
quite a while.
So,
alrighty. When we come back, we got an interesting email that Nom can answer about. This one looks like it. I'm looking at this email. It looks like it probably came from a private lender because he's asking questions about some of the loans that he's being offered. That's why I'm kind of, I'll read the question to you.
Okay.
I'm going to read it now, and then you'll answer it when we get back. I'm starting to see loans being offered that resemble some of the subprime loans offered before the Great Recession. Is this a sign of things to come? Haven't we learned our lesson?
Interesting.
So I'm thinking this is probably from a potential private investor who wants to lend his money out. It's kind of how I would see this one. All right. Let's see. Want to make a mention here also for the Mount Shasta Resort. This actually for their golf. Mount Shasta Resort is actually much closer than you think. You can enjoy the crisp mountain air, breathtaking views, and one of California's finest golf courses, all waiting for you at the Mount Shasta Resort. You call 530-926-3052 for your tee time and receive a free green fee when you bring your driver's license during the month of your birthday. I like that. So give them a call, 530-962-3050, or go to MountShastaResort.com. Okay, so here's our second trivia question. According to the Bible, who died at the ripe old age of 930? So I'm guessing you got to go back to Genesis for that one. After Genesis, but I don't think people lived too much past a couple hundred years. 930, okay? Call 888-912-1190. Be the first caller with the correct answer and win that Tan Bella certificate. Don't touch that dial. The best of investing. We'll be right back. Okay. Alrighty.
Okay, let's see. Here. So when you talk about deals of the week.
Oh, yeah. I mean, after the trivia, or after the...
Okay, do you want to do one for the next segment?
Yeah. Do a couple, because it's all about stories. People, we want to make good radio. Oh, save the file. Do you ever listen to the show, or have your wife listen to the show when you're on it?
I've only been on once. Haven't had her listen it, so I've been nervous to. I think she would cringe.
Why?
I don't know if I heard. Well, no, I take it back. I would certainly cringe if I listened to myself.
Yeah.
I listen to my, just thinking if it was my wife,
yeah.
I probably would, because I'm so used to her voice.
Yeah. We're always the worst critics, or the most critical of ourselves. Yeah. I mean, that's why I always try to get like some inflection, just because we're trying to keep the audience engaged. Like, hey, I got a deal for the week for you. You got to hear that,
Yeah, I got to work
that's all it is. Okay. You ready?
Yeah.
Here we go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Phan of Pacific Private Money. He's filling in for Mark Humph today. Second trivia question was, according to the Bible, who died at the ripe old age of 930?
Now, I may be overshooting this person by 130 years, but Yoda?
Yeah.
No?
Yoda in the Bible?
No, maybe not. I don't know. I grew up on Star Wars. So
Yeah,
I'm gonna go with that.
No, Adam. For the first guy, when you hear Methuselah,
Yes.
he was, because they always say, you're as old as Methuselah. He was the oldest one at 969 years. I figured if I said 969, you'd guess Methuselah or
Yep.
Yoda. Okay, all right. So now we have the email that came in for us that I'm sure you can answer this one. It says, I'm starting to see loans being offered that resemble some of the subprime loans offered before the Great Recession. Is this a sign of things to come? Haven't we learned our lesson? And originally I thought this sounded like it was coming from a private lender, but I guess it could be either a borrower or a lender. It's just basically with that kind of question.
Yeah, we've seen borrowers come with rate sheets from other lenders, but we also get email blasts from other lenders as well, and it is something that we are seeing more of. And it's not subprime to the extent that we saw in 2008. I think fundamentally underwriting guidelines are still very tight for private lenders, for banks, for everyone really. But there are a growing number of niche products. So certain investors, whether it's Wall Street or hedge funds or pension funds, have have funds that they want to deploy in real estate. So they say if you can provide us with borrowers and loans with these guidelines, then we'll be able to provide a alternative product that rate-wise fits somewhere between conventional banks and private money, so somewhere in the 5 to 7% range. And when you look at these different rate sheets from different lenders, their product offerings are different. But one could be one day in a bankruptcy, but however we need this other documentation, and another one could be something else. But the rates are all in the 5 to 7% range.
Okay.
And so you're seeing more of this. So borrowers do have some opportunities to, if they can't get private money and they can't get bank financing, this might be an opportunity. But they have to shop around. They really do. But ultimately, the underwriting timeframes are still pretty long for these alternative or Alt-A.
Private money would be the easiest money to get, wouldn't it?
Certainly the fastest. I mean, for us, we have so many people who come to us for speed. So at the end of the day, if you want quick decisioning and quick funding, private money is the way to go. So these alternatives are niche products.
Okay. And before we forget, because you're answering the question, how would people get a hold of you?
They can call us at 415-883-2150 or go to www.pacificprivatemoney.com.
And that would either be people who need money to buy a house or commercial property, or people who have just heard you say that your fund is paying a little over 7.5% roughly?
Yeah, between 7.5 or 8. So call, same number, same website for either.
Okay, so let's talk about the fund a little bit. You say it's paying 7.5%, and if I'm the audience, I'm kind of hearing 7.5% in today's market sounds risky. Right? Because my bank is not going to pay me 7.5%. If I put money with them, they're going to pay me less than 1%.
Right.
So how walk me through this? How you pay?
Yeah, so we're able to pay the high returns to our investors because we're not making risky loans in the sense that people think private money, they think of a fund. There's a lot of preconceived notions about our perceptions, and oftentimes when people come to our fund events and they understand how we underwrite or how we're able to make loans or the types of borrowers that we have, it's really more about transactional distress, and there is a higher cost to provide loans to those borrowers or higher rates that they pay, but from the standpoint of security or is it any riskier than conventional than a loan that a borrower with a conventional bank is going to make? Not necessarily.
Because you have the same paperwork as Bank of America or Wells Fargo, that sort of thing.
Right.
And somebody coming to you who is needing speed necessarily isn't a distressed, person hanging on bankruptcy.
Yeah.
They may be, if they had time, they could go to a regular bank and qualify, but they need money fast.
Yeah, so I'll just give you a quick example.
Yeah, sure.
Something that we're looking at this week. It came across our desk actually yesterday.
Okay.
I won't name names, but it's somebody who's pretty well known came to us needing a loan. It's actually, the loan is between $5 and $10 million
Okay.
for a large property. The person is certainly capable of affording the loan, but they made an offer on a property with a 21-day close, no contingencies. However, they have a home to sell as well. So it's that exact scenario. They're more than qualified, but because of the time frame that they're operating under to be able to close on the purchase, they need the funds quickly.
I mean, there's no bank in the world that's going to give them a loan in 21 days.
Or cross-collateralize two properties. So,
and what's the value of the property?
It's between $5 and $10 million.
And how much of a loan do they need from you?
Overall, between the two, it's like 56% loan to value.
Okay, so that's pretty conservative. I mean, most banks are up to 80% loan to value.
Yep.
You're at 56%. And you had earlier said that you charge a couple of points, $2,500 in doc fees, and in the 9+% range. So when you add all that up, I can see why you can pay the investors 7.5% and still keep something. You can't work for free, so that's how you guys make your money.
Yeah. So when investors hear about the kinds of scenarios or stories essentially that we're lending to, it starts to make sense. We have another. We often have people who. And Mark likes to put it this way, it's transactional distress. It's not borrower distress.
Yeah.
Something's going on with their purchase where they need funds quickly.
And I've heard Mark say in the past that the Pacific Private Money is one of the few companies that will do personal residences because a lot of the other, quote, competition, they have not gone through the classes, the licensing, because it's not as easy as just providing a loan.
Right.
You have to have special licenses for this.
Yeah, absolutely, and it's additional paperwork, additional disclosures for the borrower, and it's a residence in which they're intending to occupy. So some people can get business purpose loans using their home that they live in as collateral, but a lot of people who are looking to purchase a home that they intend to occupy, they can't get bank financing. Oftentimes there isn't an outlet except for us. So a lot of our business comes from banks.
Yeah, very interesting. So you're not really competing with the bank, you actually work with the bank.
Yeah, and we always refer back to the referring bank.
So that's actually kind of good for them because they save the transaction and then you put it back to them, they'll end up getting the loan back the way they wanted in the first place.
Yeah,
that's a good relationship.
It's called, for us, we have a program called Refer Recapture. So it's a program for the mortgage broker, loan officer to refer the client to us, and then they can recapture them on the exit.
Very good. Very cool. I like that. All right. Third trivia question. Moosehead Lake is the largest lake in which U.S. state? That's our trivia question. Call 888-912-1190 if you have the first caller, with the correct answer, you win that free Tan Bella tanning certificate, which is worth 5 tanning services, and that's actually worth quite a lot of money. So call 888-912-1190 to answer this question. Moosehead Lake is the largest lake in which U.S. state? Don't touch that dial. We'll be right back. All right, what do you want to cover in this last? I mean, deals are great because you can talk more about.
So we talk about another deal of the week.
Who's the borrower?
It's the owner of the Kings, Sacramento Kings.
Oh, it's so funny. I don't know which person it is, but many years ago, one of the owners, because it wasn't one owner, it was like a consortium, came to us for a loan, and he says, "Yeah, I'll put up my interest in the Sacramento Kings." And we said, "Well, wait a minute, you're part of an LLC. Do you have the right to do that?" And every other owner said, "No, we're not going to let it do that. We don't know who you guys are. You're going to be our partner in case this guy messes up."
Wow, that's interesting. Yeah. So but
is this guy? I mean, he owns it all by himself.
I don't know.
Because same thing. If there's another partner, you got to get everyone's approval, and the league
has to.
Yeah, but you're actually not taking the Sacramento Kings as collateral. You're just taking houses, so that's different. Yeah.
Unless it's owned by Kings, but no, that's
probably not.
Yeah.
So, who's going to come up with that kind of money?
We're trying to. Yeah, I don't know. We're looking at Matt's.
How'd you get that guy?
It was through Sophia Najibi.
The other Sophia?
Yeah, the other Sophia. Wow. Actually, it was through her former counterpart at Stonecrest.
Oh, wow.
So
nice loan if you get it.
Yeah.
How's Sophia working out?
She's working out well. I mean,
Good.
she has brought a lot of high-end, large deals,
Good.
and and I don't know if it's just well, it's the clientele that she that so, and I'll talk about that a little bit too. Our average loan size.
Okay. All right. That sounds good. Let's do this here. Well, welcome back to the best of investing. Edward Brown here, along with Mom Phan of Pacific Private Money. Third trivia question: Moosehead Lake is the largest lake in which U.S. state?
Let me see. I'm gonna guess Minnesota.
No, but it does start with an M.
Michigan?
No. Have you ever seen Lake Moose? Welcome to Mooseport with Gene Hackman and Ray Romano.
No.
Oh, okay. Because I think that's where they get it from. It's in Maine.
Maine. Oh, okay.
All right. So I want to make a mention here also for Transcendence Theater Company's award-winning concert series, Broadway Under the Stars, which, by the way, I saw at the Marin Civic Center did a few months ago. They did a fantastic job. I mean, this is professional, and it's really cool because they do all kinds of Broadway show tunes that you know of, different costumes and all that. It's kind of a medley. And they return to Sonoma Valley this summer. Experience world-class wine and picnicking alongside sprawling vineyards all summer long beginning June 16th. You'll see the top talent fill the stage in the open-air ruins of Jack London State Historic Park in beautiful wine country. Enjoy numbers from Tap to Fosse and everything in between with Broadway performers from shows such as Wicked, who I love the music from that, Mamma Mia, love the music from that, and The Book of Mormon, which I haven't seen yet. Tickets and information at bestnighthever.org. Check them out. And again, Stefan Stubings, I met him. He's the one I got in touch with on this. He invited me to that last one at the Marin Civic Center, and it was excellent. He's a very, very good singer, by the way. All right, so Nam, you have a couple of other deals for us to talk about.
Yeah, another deal we recently closed last week was to a high-tech Silicon Valley exec. They needed to find funds to buy out their ex on a home that in Los Gatos. So, it was unfortunate that there was a divorce that occurred, but there was some damaged credit as a result of this divorce, and they weren't able to get bank financing. So we were able to provide a $500,000 loan. Now, this is a 30-year loan because they're not going to be able to solve their credit issue in under a year.
Okay.
So we do 30-year loans,
All right.
30-year consumer loans, but we expect the borrower to pay off our loan or refinance out.
Yeah, they don't want to keep a 9+% interest rate if they can get rid of it soon.
No, they're and we don't want our borrowers to be in a loan that long. So there's alignment of interest. They want to get out. So their exit is once their credit is cleared up a little bit, they'll be able to refinance that $500,000 loan.
I told you if you charge them 17%, I'm sure they'll want to get rid of you as fast as possible.
Get that credit fixed really
fast.
Yeah. So it's a $500,000 loan, and pretty common. People who have a credit glitch, they can't get solved within the time frame it takes for conventional financing, will come to us. Interesting thing though is this $500,000 loan. That was a pretty big loan last year for us.
Okay.
But we're seeing a significant uptick in the average loan size that comes to us. It's 50% above what it was last year.
Huh. Well, why is that?
Could be just, we're in the Bay Area, so we have just higher priced homes, therefore the average loan's higher, but not 50%.
Yeah, maybe part of it's just because you guys are getting a little bit more well-known.
Absolutely.
So you're starting to see a little bit better, larger transactions.
Yeah, that, and also we're doing more construction loans, so we have construction fund sources, and those tend to be pretty large for some of the projects that have come across our desk, and we have somebody in our office who specializes in that.
Let me ask you a couple of questions on the fund. Again, 7.5% plus is really good. We talked about the fact that the kinds of loans that are going in there don't sound super risky. How much in losses have you guys had?
Zero.
Okay.
Zero losses not only in our fund, but in our firm. So, the fund has been in existence for, this is going on its 5th year.
Okay.
But we've been lending since 2008. And we've funded over 1,200 loans during that time. We've had zero losses, both inside and outside of the fund.
And is that just because real estate's gone up in value, or I guess a lot of it has to do with underwriting?
Yeah, ultimately, if it's proper underwriting, and so we say no more than we say yes in terms of loans that come
Okay,
across
so
our
not
desk.
everybody who asks for a loan gets one.
No, no, we're not like private lending was 20 years ago, where you fog a mirror and you can get a loan.
Okay.
I mean, and this is just good for borrowers in general and investors to know. There's a lot more transparency in the business today, and the types of firms that are in the private lending space today is vastly different than what it was 10, 15 years ago. So we say no 9 out of 10 times.
Wow. Okay, so only 1 out of 10 actually gets a loan.
Mm-hmm. Yeah. So that's how many it takes for us to look at before we're satisfied with the loan scenario.
And is there enough deal flow to be able to say no that often?
Yes, absolutely. We spend a lot of marketing. We're out there telling our story to the marketplace, and also, as we mentioned in an earlier segment, we're one of the few private lenders who will lend up for consumer purpose or owner occupied.
That'll open up the market for you for sure.
Mm-hmm. So, we're just seeing as I mentioned, the average loan size go up. We market to mortgage brokers, real estate offices. So we're out there telling our story all across, the Bay Area.
I mean, I would think that I'm hoping that realtors who are listening to the show will jump right on that bandwagon, because rather than being able to tell a potential buyer, sorry, I can't help you because there's no way the seller will accept a deal that's contingent upon a sale of your house or XYZ or ABC reason.
Mm-hmm.
I mean, if I'm a realtor and I'm smart, I'm going to call you guys because I'm going to tell my buyer, listen, you know what, it's going to be a little more money, but if you want to get that house, this company over here can potentially lend you the money and you can close your deal in 21 days or less, and the realtor is going to make a commission. The buyer is going to be happy because they're going to get the house, and then eventually they'll refinance out with a real bank.
Yeah, exactly. So, it's interesting because a lot of people don't realize what private money can do, how many problems it can solve transaction-wise. So transactional distress, materializes in a lot of different forms. So we are often speaking at real estate organizations and real estate offices to let them know, here's a lot of examples of deals that we've saved, and it's surprising how many realtors go, oh my gosh, I wish I had known about you 3 weeks ago. And it's same with mortgage brokers. So, for those realtors and mortgage brokers who may be listening, for us it's an education process with our mortgage referral peers.
Yeah, because you're not competing with them. I mean, you're only going to help them.
No, we're Plan B.
Yeah.
We promote ourselves as Plan B. We're Plan B for your transaction.
Let me ask you a couple quick questions about the fund. First of all, what's the minimum investment?
Minimum investment is $50,000.
Okay. And what is the cost to get in, or the load, or whatever?
No load. So
Okay.
there's no cost to get in.
I put 50,000 in. My entire 50,000 goes to work.
What
if I need the 50,000 back?
So we have redemption requests. There's typically a 12-month lockup period.
Okay.
If you want to redeem sooner than that, then there's a redemption fee of 3%. Okay. But beyond that 12 months, you just let us know that you need your funds, and we can typically redeem you within 30 days or less.
Okay.
You do also need to be accredited, so which is $1 million net worth, excluding in that calculation it's $1 million, excluding your primary residence.
Okay. So rental property or stocks and bonds counts.
That counts.
Other investments. Okay.
Yeah.
I just can't put the house in that calculation.
Exactly. In the Bay Area, that's almost the median income borrower or homeowner.
Also, I think if I remember correctly, you have to, if you don't have that kind of net worth, but you have high income, you can qualify.
Yes. So 200,000 annual income as an individual, 300,000 as a household.
Okay. Very good. We've got just another 20 seconds before we have to cut to our last break. Anything you want to cover?
Yeah, just the types of loans that we're doing. We're doing a lot of bridge loans these days.
Okay.
So especially now that we're in this real estate season for the next 3 or 4 months, just want to put out there to the realtors and mortgage brokers. If you have a borrower who has a home to sell and is looking to purchase, contact us if you need to have a cross-collateralized loan.
415-883-2150. All right, don't touch that dial. The best investing will be right back.
Okay, the last 5 minutes. We'll go quick.
weird.
Okay.
Just kept going on.
Oh, kept recording?
Yeah.
You've got my laptop.
Yeah, right.
So glad that got fixed.
Yeah, really. So you didn't have to buy a new one? Or
No, it's so silly.
Oh, that's right. It was stuck on that.
Stuck in under key.
All right, we only have 5 minutes for the last one. What do you want to cover?
Okay, let's see. No more trivia questions.
Nope.
Let's see. Any upcoming events we can talk about?
Yeah.
None in June, but we have webinars.
Oh, that's good. Okay.
We'll have a webinar June. This is quick.
Ready?
June 28th.
Some of this just for you.
It's a webinar. I think Mark should be back, or it might be just you and
Wait.
myself.
June 28th is oh, no. Hold on. No, never mind. June 28th. Okay, I don't have that. You haven't sent it out yet.
No.
Oh, okay. And 6 p.m. or 5 p.m.?
We do 5 for that.
5 p.m. I know you'll send it out to me.
Yeah. Do you know when Mark's back?
I have to look at his
Okay.
calendar. All right. Okay, here we go. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Phan of Pacific Private Money. So I know you've given out the phone number, and you guys are located in Nevada.
Right, we're located in downtown Nevada.
Okay. And do you ever do like seminars for people?
Yeah, we hold seminars. We used to hold our seminars monthly at our office in downtown Nevada, but now we're holding them quarterly. So we had one this month, May. In June, we're going to have a webinar. So we rotate. But for participants who want to learn about the fund but can't make it to Nevada, we have the fund webinar. So the next one is June 28th. It's 5 o'clock.
And how do they sign up for that?
They can go to our website and sign up for information, and then we'll send them the webinar details and let them know. It's from 5 to 6 o'clock on June 28th. They can log in, they can type in questions. It's just like a regular live fund event at our office, but it's just virtual. And we've had the furthest participant was Miami, Florida. So it's great. We're reaching a broader audience. A lot of our investors are actually, or a healthy number of them, are out of state.
Okay, so that would be my other question is, do you have to be a California resident to invest?
No, you do not. You can be anywhere in the country. So
Even international too, I think, then, right?
Mm-hmm.
Yeah.
Yeah.
Wow, how did that person get a hold of you from Miami?
You know, somebody who we've been in contact with for a number of years, actually. They may have originally invested with us in when they were living in California.
Oh. Okay.
And it's funny because we send out these invitations all the time. And they say, I'm sorry, I live in Florida. I'm sorry, I live in Florida. And then finally they said, can't you just do a webinar? And we're like, duh, we should just do that. So we did. And now they're able to participate. So
You mean the guy wasn't willing to get on a plane and come to your seminar? Come
I know.
on.
What are they thinking? And then we also have another one, a doctor in Utah, who attends every once in a while on our webinar. So the next one's June 28th, and then probably the one after that will be August.
Okay.
So we'll have a summer event at our office in Nevada, but we'll make that announcement in July.
All right. We have a couple minutes left. Anything you want to specifically cover there?
One other thing, going back to our realtor and mortgage referral sources,
Yeah.
we're always willing, we hold events at our office for them too. Again, as I mentioned in the previous segment, you don't know what you don't know about private money. So it'd be a really good educational process to learn for not only for yourself, but for your clients.
Yeah.
So I just want to put it out there that we're always willing to drive anywhere in the Bay Area to do a presentation at a real estate office, to a mortgage office, we'll do a lunch and learn. And we're going to be doing a lunch and learn with the Marin Association of Realtors sometime in the next couple of months about what can you use private money for. So I want to put that out there for our realtor and mortgage broker clients.
Okay. And again, if people are interested in getting a hold of you for investing,
They can
meeting to borrow.
Same number, 415-883-2150. Same website, www.pacificprivatemoney.com.
And did they ask for you?
They can ask for myself, and if I'm not there, Bianca will take care of them.
Okay. Oh, she's the one who makes the excellent food.
Yes, another reason, maybe the biggest reason why you should come to our events in Nevada is the catering expertise. I mean, I've seen some repeat investors come to these events.
I think it's just for the food.
Yeah, I think they're just coming for the food, so you're never going to lose out.
Well, she was a professional caterer, as I remember hearing.
Yes, she's a jack of all trades, but catering is definitely high up there on our list of expertise.
So when's that next seminar?
It'll be coming at our office.
Yeah.
It'll be sometime in August, probably the last Wednesday of August.
All right.
So.
But in the meantime, you can still do the webinar.
Yep.
All right. Very good. Okay, we're going to cut out for today. Here's our thoughts for the day. I do not want the peace which passeth understanding. I want the understanding which bringeth peace. Helen Keller said that one. I thought that was pretty good.
Wow, that's great.
Yeah. And people seldom do what they believe in. They do what is convenient and then repent. And who said that?
Helen Keller?
No, the famous theologian Bob Dylan.
Every time I'm on the show, I probably get 1 out of 10 questions right.
Yeah, I'm surprised you didn't get Adam of the Bible. That's okay. But you knew Merlot. That was pretty good from the movie Sideways, which is a very funny movie. I like that guy. He's a funny guy.
He is.
Holds you money. All right, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long. Okay. On the money. What? What was the money?
You got this thing down.
Well, after 7 years, one would hope.
7 years?